Hello traders, and happy Friday. What a wild and crazy and volatile week we have had in markets. But look, we have actually learnt something meaningful this week, and we learnt that on Wednesday night when we saw the US CPI print. So month on month, core CPI marginally went up. So the big debate that the market was having about the Fed rate cuts next week, whether or not it's going to be 25 basis points or 50 basis points, was solved. In that, with that marginal increase in core CPI, the market only expects 25 basis points next week by the Fed. So if they deliver 50 next week, it's going to be a big surprise for the market. No doubt we'll see a big sell-off in the US dollar on the back of that if that happens. Okay, ECB last night, they cut rates. That was expected. They have another meeting next month in October, but no one expects them to cut rates again so fast, but they actually did leave the door slightly ajar to have that option to cut rates again in October. So look, the global rate cuts are happening, and we are getting the Fed starting its interest rate cutting cycles next week. Okay, so one of the markets that has enjoyed the focus on these interest rate cuts is equity markets. Yes, they have been very volatile. We saw the S&P, fall 100 points on Wednesday, only to spike and rebound in the same session up 150 points. Buying the dips has certainly been working once again for equities, and the S&P has actually closed up 4 days in a row positive. And we are now less than 2% from record highs. So be very brave to be selling equity markets at the moment with this momentum and strength. Look, those record highs could be taken out in the short term, especially if the market has a positive response to FOMC next week. Another market that certainly has enjoyed the focus on the global rate cuts is gold. So gold last night made a new record high at 25.60. So that's been helped also by a weaker US dollar. So gold trades inverse the US dollar. So US dollar weakness, we get gold strength. Look, technically, the sort of short-term targets that we could see in gold is around about the 25.90 area and a test of 2600. Gold was range trading for a good month in a $60 range. It was range trading 24.70 to 25.30, so that $60 range. Technically, when we see range trading and a breakout of that range, the targets are the width of that range. So if we put $60 on top of 25.30, which has been the top end of that range, we get those sort of targets up towards 25.90. Medium term, depending on the size of the cuts we get from the Fed and US dollar weakness, and whether or not we start pricing in a recession, then the targets up towards 3,000, maybe longer term, could be achievable for gold. Finally, the other big market that had moves this week that were meaningful is the yen, dollar yen. We've seen the BOJ talking hawkish again on rates and talking that potentially they could be targeting their policy rate up towards 1%. So that's a big deal. So dollar yen this week actually broke the post the carry trade unwind lows, which were around that 140, 170, and we marginally dipped below 141. But certainly at the moment, with the dollar weakness and obviously with the hawkish BOJ, dollar yen seems like with high conviction that it's a sell and rallies. I'd imagine at some stage we are going to take out 140 and trade at much lower levels. Anyway, look, good luck with the trading, and we'll catch in with you next week.